Heads up, we got stocks fading a little bit here. Russell just shaved its rally in half, but we got some other things on our mind. We're going to talk retail ahead of Nike earnings tonight. Zach Waring joins us from CFRA and Mr. Tom White here in studio looking at options. Zach, when we look at Nike, what's the potential for them to get a little love like Lulu did on their earnings?
Yeah, I think pretty good. I think expectations for both of these companies heading into this earnings season were pretty low, and we thought, they're both still great companies, great brands, and with expectations this low and valuation pretty muted, we thought there was a pretty good chance that they, had good reaction into earnings.
Okay, what gives you the confidence right now? Take me through the numbers, because it seems like, it's Nike. The baseline of profit and products have been there, but the stock has just gotten thrashed unrelentingly.
Yeah, and I think a lot of that has to do with expectations for earnings this year. Analysts aren't expecting $3 a share. They're expecting about $2.70 in earnings this fiscal year, which is well below the last few years. Last year they did $3.95. And so I think expectations are too low. In my opinion, gross margins held up pretty well last quarter. Jordan Brand did poorly, and they think that Jordan Brand is going to do poorly. That's kind of a planned thing for the whole year. But, we think expectations are pretty low. EPS is down 30-40% for the full year, which is a recipe for success, I think, in terms of quarterly earnings reports.
Okay. Growth potential, aces up the sleeve. What's Nike's hottest product right now?
A lot of people thought, a lot of this had to do with maybe running, market share loss. And actually last quarter, they grew their running shoes category pretty good. So, I think a lot of this is the Jordan Brand's under a little bit of pressure, but, we think the running category can continue to do well. A lot of people think Hoka and ONON are kind of coming into the market and stealing a lot of market share in terms of running, but that wasn't the case last quarter. And they were positive on the future for running. So we think that'll hold up well.
When you say that wasn't the case last quarter, is that because they maintained or they grew? Obviously they're not growing like Hoka is.
They don't give exact numbers for running, but they did say that they had growth last quarter.
Okay.
And so they think, the full year will have growth for running as well. So maybe some of that, loss of market share has been overhyped here. They're going to continue to buy back shares. They've got an incredible balance sheet, which should kind of support the share price. I think anytime shares dip below 80, I think that's a long-term investor's, buy point for Nike.
All right. So you've got a 3-star rating, effectively a neutral. You're not crazy about it. $89 price target does suggest some room to the upside. It seems like Lulu in your mind is a little bit more close to fairly valued at $375. Your target's like about right there, right?
Yeah. So Lulu obviously has had a huge bounce off their 52-week low over the summer. Shares are up 50%. So after that move, we think shares are probably where they're supposed to be. They're still working on their inventory newness, which they think will kind of be back to normal in the spring. And so, we think shares are pretty fairly valued there as well. The space overall, we're pretty neutral to negative. We think a lot of these, stocks have run up a lot into the holidays, and they're due for a breather.
Okay. Got it. Thanks. Appreciate that, Zach.
Yeah. Thanks for having me.
Tom, what do you think? 2 neutral ratings.
Yeah.
Lulu basically right at his level. Nike, though, seems like there's some room for upside in their valuation model.
Yeah, there's some short open interest in there, too.
In
so
Nike?
Maybe, in Nike. Now,
well, they're still contracting. They're expecting down 4.5% sales.
Yep. And it's off 28% so far this year, so it's severely underperformed the overall market and the sector itself. So I looked at implied volatility levels in here in Nike going into this report. The option market's priced in about a plus or minus $6.50 move in the shares, nearly 9% at this point. So I want to take advantage of vol dispersion between option series for this strategy.
Okay.
Really short-term positioning. Looked at a call diagonal, just 1 week wide. So I went out to the December 27th weekly cycle that expires in 8 days and just bought the at-the-money 77 strike call. And then in the near term, December 20th options that expire tomorrow at the close sold the 83 strike call. So a $6 wide bullish call diagonal to the upside. $6 wide, right? But I'm paying about a debit of $2.50. So I'm paying less than half the width of this call diagonal that's bullish in stature here. So why am I paying only $2.50 debit for it, and that's my risk on it? It's because the volatility that I'm buying in the December 27th weekly options on the 77 strike, that's only about 81% on aggregate in that series, and then selling about 180% in the December 20th weekly options where I'm selling the 83 strike call. So you're taking advantage of upside. You can see here from the risk profile, anything above maybe about 78 here is going to be profitability on this, but I'm offsetting some of my costs, taking a bullish stance on it where maybe I'm going to get that quick pop. And I'm not doing a calendar which might cost less and have less risk, because what if we jump 2 standard deviations? What if they give good news, good guidance? The new CEO might have some positive things to say, and this allows you to take advantage of profitability all the way up because you're paying such a low debit for it. But definitely a bullish trade. You need some slight movement to the upside here to get above that break even.
Boy, well, any movement, slight or otherwise, would be welcome for Nike Bulls. So.
Yeah.
All right, the call calendar kind of fits, I think, with Zach's
Diagonal.
take. Sorry, the call diagonal.
Yeah.
Fits with the take. Thank you, sir. All right, how about Lulu? Pop on earnings, then the fade.
Yeah.
What's the vol look like by comparison? Does it make sense to do something similar?
No, IV percentile rank, only about 40% in here right now. So, it's not depressed, but it's not expanded
Not as
either.
juicy as a pre-earnings trade.
And remember, the jump that we got up in earnings a few weeks ago, we filled that gap to the downside on that initial pop. But so maybe this is a good base level for these shares, because they did have some really good preliminary numbers as far as holiday sales go. So I looked at something a little bit more conservative, neutral to bullish in stature. Zach's price target on this was right about where their stock's trading right now. So I just looked at selling a put vertical. We're not to the January monthly cycle, so 29 days to expiration. Sell the 360 strike put, and then against it, because I want to stay risk defined in these names, especially with the market gyrating the way it is over the last couple of sessions, buy the 350 put. So a short $10 wide neutral to bullish put vertical that's out of the money to the downside. You're collecting roughly about a $3 credit on it. That's what you can make. You got it $700 in risk, but you can see that takes my break even all the way down to 357 over the next 29 days or next month. That's about 5% below the current share price in Lululemon. So 3 out of 4 scenarios on this type of strategy where I profit, goes higher, stays where it is, even goes lower but remains above 357. I'm going to be profitable on this trade.
All right. I like it. This case, the vertical, and Lulu, which is no stranger to volatility. It seems like it makes sense to kind of also hedge yourself a little bit, define your risk. All right, shares up about 80 pips right now. Lulu's actually been okay and a nice little comeback, but we'll see what Nike does after the bell. A little bit more pressure for them to perform. Thanks, Tom, for the trades there. Thanks, Zach Warren, for the look at the potential for Nike this afternoon.